short $8.4 billion of credit default swaps related to mortgages or financial companies. A giant bet, and I was extremely confident in the outcome. I know for sure that some of them thought I lost my mind.
The U.S. boasts a couple of value investors doing great things undercover, but one of them stands out because he refuses to just invest and gather profits. Michael Burry would rather come public with his opinions on investments to either guide or mislead prospective investors. We can describe Michael Burry as the most controversial investor in the world. In this video, you'll learn more about him and how he survived the tricky investment terrains. You'll also look at some of his bizarre predictions and how far they've materialized. Michael James Burry was born on June 19, 1971. He is an American investor, physician, and hedge fund manager. Michael is the founder of the hedge fund Scion Capital, an organization that functioned between 2000 and 2008. The investor was born and raised in San Jose, California. He suffered from retinoblastoma when he was 2, causing him to lose his left eye. Since then, he has been using a replacement eye. He studied economics and pre-med at the University of California, Los Angeles, and bagged an MD from the Vanderbilt University School of Medicine. While schooling, he fueled his passion for financial investing. Although he's not a practicing physician, he keeps his license dear to his heart. He is married with kids, and they live in Saratoga, California. When his son was diagnosed with Asperger's syndrome, he believed he had the disorder too, because the symptoms were like what he was experiencing. Although he was bothered by the news that he had the illness, the diagnosis helped him understand the qualities everyone found frustrating about him. You would never find him describing Asperger's as a disability and illness because he believed the condition made him more intelligent. Burry is a fan of heavy metal music and loves bands like Lamb of God, Pantera, King Diamond, Amarth, and Slipknot. Burry's estimated net worth is pegged at $300 million. Christian Bale portrayed this famous investor in the 2015 movie titled The Big Short. Michael James Burry is famous for some of his weird predictions, which were not taken seriously until they happened. When he began analyzing the subprime financing markets and balance sheets, he noticed lots of irregularities in the market. He saw the riskiness of the market as millions of borrowers with few assets and low income bought houses with tremendous leverage. Some borrowers made low or no down payments for mortgages they couldn't pay back if interest rose. Unfortunately, the banking system was valued as though the mortgages would all be paid. He realized that this would not continue in the long run. He began to tell investors about the risks in the system, but nobody listened. Of course, this was not the kind of news they wanted to hear. At some point, they were scared and wanted to retrieve their investment, but it was too late. In 2007, the risks in the system became more glaring. Burry's investment paid off, and he made millions for himself and his investors. Michael became famous after rumors filtered in that he made a $1 billion bet against the subprime mortgage industry before the Great Recession of 2008. He approached Goldman Sachs and persuaded him to sell credit default swaps that bet against subprime deals. This move was shocking, given that he was a small fund manager. He began placing bets in 2000. The bets were lost for a long time. However, before the real estate market burst, Scion made regular payments to cover his swaps. The capital outlay caused investors to demand their money back. It then dawned on everyone that Burry was correct, and his fund earned him a whopping $700 million for his investors. He earned $100 million personally. In a publication in 2010, the businessman said that anyone who carefully studied the financial market between 2003 and 2005 would have recognized the obvious risk in the subprime markets. Another controversial bet Burry delved into is the video game retailer Gamestop. In March 2020, he announced that he had acquired 3 million shares of Gamestop. He further persuaded the company's managers with an open letter demanding certain changes. Within 6 months, he reduced his investment from 3 to 1.7 million shares. By January 2021, GameStop's share price skyrocketed because of the efforts Reddit users put into it. That same month, the company sold a share for as high as $480. By then, Burry's investment had climbed to $816 million in value. He paid roughly $4 a share when he acquired his stake in 2020. Michael Burry was one of the heroes of Michael Lewis's book The Big Short: Inside the Doomsday Machine. The literature tells the story of how he predicted the credit and housing bubble collapse in 2008. In the 2015 adaptation of the book, he played the role of Christian Bale. Although he was socially awkward, he was a brilliant investor. His influence on the book and movies made the works famous. While The Big Short focuses on Burry's bet on the house crisis, he was a talented investor before then. Initially, he was a self-described value investor, but when he began discussing some of his financial decisions online, he gained a massive following. This motivated him to establish his hedge fund. When he announced the establishment of his hedge fund, Joel Greenblatt, a value investor, was interested in investing with him. He offered $1 million to help Burry's fund. In 2000, he published an article describing some of his investment philosophy. This publication revealed he was a fan of Ben Graham and Warren Buffett's strategies. These strategies were caged under 4 headings: investment with a margin of safety, perform bottoms-up fundamental analysis, look for great stocks in underperforming industries, portfolio management. Let's see how he imbibed these 4 principles in his career. Burry believes it is important to understand a company's value before investing a dime. This protects the downside and ensures that you can prevent capital loss. He believes that investing with a margin of safety means you won't worry about catalysts. Investing with a margin of safety is one thing, but it is another to research the stock. Research is the weapon every investor needs to survive in the market. Burry didn't care about the level of the stock market and had no restrictions on potential investments. The nature of the investment didn't matter, provided he found value in it. He realized that less popular industries had great opportunities to buy the best shares from companies at amazing discounts. He uses stock screeners to scan many companies while looking at the EV/EBITDA ratio. If a stock passes his screen, he looks closely to determine the price and value of the company. Ironically, he ignores price-earnings ratios and thinks return on equity is dangerous and deceptive. He'll rather settle for minimal debt. He also invests in a kind of investment called rare birds. These birds include opportunities and companies selling at less than 2/3 of the net value. Sometimes, investors find value in industries avoided by other investors. Because an industry is out of favor doesn't mean the investment is unattractive. When Caterpillar stumbled in August 2000, Burry took notice. Although the situation was bad on the surface, he realized that the construction segment was only 10% of the company's sales. The company later diversified by product and geographic areas. Since he saw the company's future, he invested and bought 200 shares. In August 2000, he bought 800 shares of Clayton Homes amid the trouble in the housing industry. One key area he focuses on when investing in underperforming industries is the company's management. He expects the management to buy back shares for less than they're worth when the company is undervalued because of the avoidance by investors. Another strategy that has worked for this famous investor is that portfolio management is as important as stock picking. Good portfolio management means an investor must answer various questions like when to buy, when to sell, what's the optimum number of stocks to hold, should one diversify their investment, is low turnover a goal. Burry has diverse ideas about portfolio management, and for him, conforming to a general view may not be ideal. Doctor-turned-investor took to Twitter to lambaste the U.S. government after they announced the lockdown. He said the lockdown was worse than the disease itself. After the government declared a shutdown, millions lost their jobs, triggering one of the country's deepest ever economic contractions. Low-income families were the worst hit. The financial analyst was not comfortable with the government's style of tackling the pandemic, especially as other economies still thrived despite the virus. He had also swayed medical policymakers, saying the virus would have been managed through common-sense measures like washing one's hands frequently. He quoted Japan and Germany as being more deliberate about their economy despite the pandemic. Before 2020, he had been silent about his investments and made no public statement about them.
As a result of what happened while you were growing up, you now face a future that will feature either another Great Recession during your 20s or during your 40s, a U.S. debt to GDP ratio exceeding 200%. And that's not me, that's the Congressional Budget Office. Me, I think they're ignoring reflexivity, and I think you face both.
Michael Burry was famous for his 2008 prediction. He also made many failed ones. In March 2021, he took to Twitter to warn his followers about Bitcoin, saying it posed more risk than opportunity. He said the current price of the coin was unsustainable. Weeks later, he had to swallow his words because Bitcoin recorded an all-time high of $64,000 before taking a breather in April of that year. In January 2021, he also told his followers that stock would fall like the housing and internet bubble of the past. Days later, Elon Musk was announced as the richest man in the world. For a man used to investing in stocks, we're shocked to learn that he now invests in water. Why water? Although 70% of the Earth's surface is covered in it, he sees an opportunity there. While water is readily available, fresh water isn't. Only 1% of fresh water is classified as easily available, which is grossly insufficient for a growing population of 7.7 billion people. The demand for fresh water is increasing, which positively affects funds and stocks in the industry. By 2025, it is estimated that 1.8 billion people will live in areas prone to water scarcity.
I believe that agricultural land, productive agricultural land with water on site, will be very valuable in the future, and I've put a good amount of money into that. So I'm investing in alternative investments as well as stocks.
Burry sees an investment gap in the industry and immediately jumps on it. He invests in water-rich farmlands which are protected from many government laws. In an interview, he affirmed that food is the best way to invest in water. He would grow food in water-rich areas and transport it to water-poor areas. The residents of those places would pay anything to put food on their tables. Ultimately, the business would be profitable and sustainable. Reports show he is also investing in almond farms because the nut has taken over peanuts to become the most popular in the USA. Citizens consume 10 times more almonds than they did in 1965. Michael Burry is famous for being a risk-averse investor. He invests in stocks with near certain returns. Although water won't produce as much return as the subprime mortgage market, it is a relatively low-risk investment in a time of high market volatility. Although perhaps Michael Burry is a successful investor, this might not be the case. His relationship with investors has been tainted following his records of disappointing them. Despite his success, he could not fundraise, forcing him to liquidate some of his assets and ending his career as a public funds manager. If you like this video, check out this next video as you'll find it super interesting.